Welcome back, everyone, to another episode of Trade by Numbers. If you're brand new to the channel, my name is Josiah, and I trade stocks and cryptocurrencies for a living. And if you hate making money, this is not the channel for you. Now, if you like making money, if you want to learn how to invest so that your money can work for you instead of being out there working for money, so that you can achieve financial freedom and live the life that you want to live, then make sure you subscribe to the channel, hit that notification bell, and give me a big thumbs up. And if you really want to get into this deeper, make sure to hit that top link below the video. Come over, join us on the Discord. We're going to be giving away some free cash as we grow the Discord out. And you're going to be able to ask me questions, bounce ideas off of other like-minded individuals. It's going to be a great community once we get that built out. So come be a part of that. Alright, so this is part 4 of our series we've been doing this week. And we finally got to my favorite, or at least what's fast becoming my favorite, especially if you've got, a decent amount of money to invest. If you're starting with $500, $1,000, this probably isn't up your alley yet, but this is a good thing to start learning now so that you are ready when you get that larger portfolio. And what we're going to be talking about today is going to be covered calls and cash secured puts. Now, a lot of people separate these differently. To me, these only work well if you're doing them in conjunction with one another. So that's the reason we're going to talk about both those together. If you're not familiar with what these are, a covered call is when you have 100 shares of a company and you sell a call on those 100 shares. Instead of buying a call like you normally would do if you're trading options, you're actually selling that call. You're creating that call, so to speak, so that someone else can use that and trade it. And you get paid a premium for doing so. Much the same as, when we was talking about dividend stocks, getting paid to hold stocks. That's the beauty of the covered call is you can have a stock, and while you're holding it, while you're waiting for it to move, you can be selling calls on this and making premium every single week, and just boosting that revenue while you're waiting for that move to take place. So there's a lot of potential there. And cash secured puts, same thing. When you've got empty cash just sitting in your account, you're waiting for something to get down to that price that you want to buy it at. You can be selling cash secured puts at that strike price. If you're looking for something to get to, let's say, $5, it's trading at $6 right now, you want to buy in at $5. So you can buy some cash secured puts at the $5 strike. You can get that premium if they don't go to that. If they do go to that, then you get the stock at the price that you were wanting. So it works out really well. There's very little downside if you do this correctly. Now let's talk about what's the upside to doing that, Josiah. You said we're going to talk about cash secured puts and covered calls. What is the upside? What's the benefits to this? And is there any other downsides? We're going to talk about the good, the bad, and the ugly. So, same as with the rest of the week, we're going to hold with that $100,000 portfolio. And remember, if you don't have $100,000, all these principles apply regardless what your amount is. I just wanted to use a fixed amount to really kind of showcase each of these things and at a number that it really kind of makes sense. So the beauty of this here is we've got income. Yesterday we was talking about the 401k. Of course, no income to that. With this method, you're going to have income coming in all the time. And that's a real beauty. So we put $100,000 in the account and we buy ourselves some stock, whatever that stock may be. Now, the important thing is going to be choosing that right stock. So many people that do this method, they've got big blue chip stocks, they've got Amazon or Apple or something like that there. And these stocks, they don't have a whole lot of movement, and therefore the premiums on the options contracts are not that big. So you've got to pick the right stock to do this with. If you've been following me, I've actually got a couple of portfolios dedicated to just this. One of those is solely dedicated to the UVXY. I built out a portfolio on the UVXY. We bought up a bunch of them. We rode them up, let them come back down. We sold them up near the top. We started selling cash secured puts on the way back down. We've picked up a bunch more. Now we're still selling some cash secured puts in it, and we're selling some covered calls on that. So we're making really good money. Well, what kind of money are we expecting to make? Well, if you buy those big boring stocks, maybe 1% a month. But if you're picking the right stock, UVXY for instance, when I created that portfolio, I was expecting to make 2% a week. That was my goal. Now that's a lofty goal, but that was my aim. Now we've actually done much better than that. Over the 3 months we've had that portfolio, I've averaged 3.8% return every week just on the covered calls and the cash secured puts. And when you value the run up and everything that we had, in all honesty, that portfolio is already up over 40% in the last 3 months. So I'm super happy with that. But we've averaged almost 4% just in the covered calls, cash secured puts. So that's twice what my goal was. I have another portfolio with some other stocks in it that's actually outperforming that. But so there's a lot of potential here. However, I would say that there is dozens of stocks out there just waiting for people to find them. Super easy to be able to get 1% a week. So unlike the rest of the investments that we talked about this week, where we kind of went with the upper end of things, we're going to only assume 1% a week in income. So we're going to be aiming at a 1% ROI on this $100,000 as far as income. Now that means that we're going to make roughly $1,000 a week on our 100 grand. Throughout the course of a year, that is $52,000 in just income. Now that blows away everything else that we've talked about. So that is going to give our income bracket an extremely high number. We're going to go ahead and give it a 3. Good as it can get, because that is fantastic. And if you're doing better than that, if you're getting that 2%, you're talking about $104,000. 3%, you're talking about $156,000 on just a $100,000 investment. And we haven't even got to growth yet, because one of the big differences between this and something like a dividend play, dividend stocks are more stable, so they don't have a ton of growth. So we average those out at about 10% a year. Now the kind of stocks that we're going to want to be in for this is going to be stocks with a lot of volatility, a lot of movement. And those stocks are stocks that are moving huge numbers, 40, 50, even 100% a year. So we're going to get a ton of growth. Even if we just say 40%, 40% growth on this, even if we've only got half this money invested, the other half is sitting aside, doing cash secured puts. 40% growth on $50,000 is still a $20,000 gain in growth above and beyond the $52,000 that we're setting ourselves up for income. This is a massive way to accumulate wealth and do it in an extremely short period of time. Now, you might say the downside to this is we are now day trading. This is short-term capital gains. We are not doing long-term capital gains here. And so I know a lot of people will not do this simply because they do not want to pay short-term capital gains tax. Because you might have, where long-term capital gains might be 15%, we might be looking at upwards of 30% in taxes on short-term capital gains. But with that being said, let me ask you this question. Would you rather have 70% of $1 million, or would you rather have 100% of $100,000? It doesn't really make sense. Going back to real estate, we said 0% taxes if you're doing it right. $12,000 a year if everything went perfect in income. With this here, if you're making $52,000 a year in income, even if you're having to pay 30%, about $15,000 in taxes, you're still clearing over $35,000 even though you're paying a higher tax bracket. And again, we talked about this when we was talking about the dividend portfolio, and I'll say it again here. If you get your skill level up, you can bring this number down closer to what the long-term capital gains tax is, or even on down to zero if you're savvy about what you're doing. But even if you're paying the 30%, if you can get a much larger return, who the hell doesn't want to have that bigger piece of the pie? Even if you're paying out more, if you're still gaining by that much, to me that's a no-brainer. Now, what about skill level? This is going to take some skill. You're going to have to put a little effort into yourself to be able to know what stocks you're looking for, to be able to really get in there and find the right ones to do the job for you. So you're going to need a fairly high skill level. So we're going to make the skill score kind of low because you are going to need some skill here. Now, what about our overall investment? Well, we just said that we're getting huge growth, minimum, say 20% on the entire thing, which is massive. That's way bigger than anything else that we've had. And we're getting a massive amount of income. I mean, $1,000 a month, or $1,000 a week, who couldn't use an extra $1,000 a week? That is enough income to pretty much cover most people's bills on as little as $100,000. And that's huge to me. That's why I say gathering wealth is not that difficult as long as you do it correctly. You get the knowledge to go out there and really chase this. It is not that difficult to reach financial freedom. You just have to dedicate yourself to it. So our overall investment gets a max score because that is going to go up fantastically. We take this over the course of 10 years, just our 1% a week. This represents 52% a year ROI in income. And then we're gaining another 20, 40, 50% at least in growth. That's going to be massive. When we tally everything up tomorrow and compare all these different strategies against one another, I'll figure out everything for a 10-year period, and we'll be able to see how all that lines out. But you know that is a winning strategy right there, and it's not that difficult to do. You just got to put in the time. So if you've never heard of cash secured puts or covered calls, I suggest you get out there, learn a little bit about them. Even if you're not trading in them yet, start learning a little bit about them. Talk to someone that does know about them, because there's a lot of potential there for you to be able to get in there and start making some real money. Even if if you've got $10,000, that still gives you a good start. And if you're doing it correctly, there's just not a lot of downside to this. That's what I got for you. I hope you enjoyed this. We're going to tally everything up tomorrow and see which investment works best for you. So until then, be blessed, and remember, never trade with your emotions. Always trade by the numbers.